but there just tends to be silver to be more of an individual retail person because they can have more quantity of it, where gold has been heavily purchased by central banks. I don't think, nothing that I've seen that we could talk about doesn't mean it's not happening, but I don't think central banks are hoarding silver in the same way that they've done these gold last few years. So I would commend silver in this regard, that if it is outperforming gold without that luxury of a huge, person that has tremendous deep pockets, it really attests the silver's recent strength is real and something to respect.
Gold prices posted modest gains of over 0.22% on Wednesday as the latest U.S. inflation data signaled further cooling, reinforcing investor expectations that the Federal Reserve may resume its easing cycle in September. XAU-USD was last seen trading around $3,327 after briefly touching a daily high near $3,360 in response to the softer consumer price index print for May. While those initial gains were partially retraced, the broader outlook for gold remains positive amid ongoing macroeconomic and geopolitical uncertainty. The dip in inflation compared to April's figures gave gold bulls an opportunity, as easing price pressures are generally supportive for non-yielding assets like bullion. However, ongoing tensions and uncertainty surrounding U.S.-China negotiations are likely to keep gold well supported in the near term, with investors seeking safety amid a fluid global environment. PeterGrandich highlights an interesting divergence in the behavior of gold and silver. While traditionally both metals moved in tandem, recent trading sessions have shown a split, something he views as a sign of a maturing market. Gold remains the asset of choice for central banks, reflecting institutional demand, while retail investors are increasingly drawn to silver due to its affordability. Silver's recent rally, primarily driven by retail investors, adds to its significance and demonstrates real underlying strength. Silver is holding firm near multi-year highs, trading around $36.60 per ounce during early Asian hours on Wednesday, after registering a slight 0.50% decline the previous day. Monday's peak of $36.89 remains the highest silver price in over 13 years, reinforcing the metal's ongoing bullish trajectory. According to Grandich, gold appears to be forming a strong base in the $3,000 to $3,500 range, which could serve as a launchpad for further gains. His bullish stance is not limited to physical metals. He also sees value in mining stocks and even speculative junior resource companies. This broader market participation reflects growing confidence in the entire precious metals sector, driven by both macroeconomic shifts and increasing investor interest. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
So the last time we spoke, I had told you that after many years of using a cliche line of mine that owning silver was like kissing your sister, because I'd always choose gold first over silver, I had turned quite positive on it. In fact, when it briefly went under 30 a couple months ago, that's when I'd said, it's time. The ratio has gotten too out of whack, and we're not surprised to see silver break this, whether it was purposely manipulated, just people were selling it at a certain number, whatever it was, that it looked like it was going to go through this time, and that would elevate silver to probably lead gold for a while. And as you said, we've just done that. Today was a very healthy little consolidation after breaking that type of level. And I think that both metals are going higher. I do think, as I've said to you now for a few weeks, the longer gold can trade, maybe 3,000 as the low, and I don't even think that's coming now. I think that's kind of off the table, but use 3,000 to 3,500. The longer we would trade in that range, the higher we would end up going afterwards, because it would be a stronger foundation to build from. So I'm very, very bullish on the metals. Of course, as you know, several months ago, I kind of took physical bullion out as my first choice and started to go into mining shares. And then I went in the ultimate gamble, which is junior resource stocks. But all in all, physical metals, the mining shares, the junior resource market, all have their foot on the gas pedal, and it's forward as far as my eye can see at this moment. I guess if we looked back, we would see certain periods that say almost 90% of the time, if gold was down that day, silver was. If gold was up that day, silver was. Now we've seen some days where one could actually be off and the other one up. We saw that a few days ago regarding the silver market. I think it's healthy that they both can take turns versus one dominating. There just tends to be, and you probably may see it in your end on the physical side, but there just tends to be silver to be more of an individual retail person because they can have more quantity of it, where gold has been heavily purchased by central banks. I don't think, nothing that I've seen that we could talk about doesn't mean it's not happening, but I don't think central banks are hoarding silver in the same way that they've done these gold last few years. So I would commend silver in this regard, that if it is outperforming gold without that luxury of a huge, person that has tremendous deep pockets, it really attests the silver's recent strength is real and something to respect. Sure, going back to my days as a money manager, it was unheard of for gold to be priced above platinum. Platinum would always carry a premium and all. And but it kind of, I guess because the main usage of it was always the catalytic converter and the electrification, and I don't know what took that away, and I don't know how much steel is used versus how it used to be in cars. I think the other concern, and one of the things I think why platinum has started to rise again, is the very fact that it's so low a price versus gold, but also one of the countries where you're most dependent on new platinum supply is really being torn apart, and that's South Africa. And then the other country, of course, is Russia. So there's a concern about future production ability because of where we just know that they're at. But I don't think the public is anywhere close to it interested in it as it was percentage-wise versus gold and silver 30 years ago. I think the public is front and center on gold and silver, and and platinum sitting in the back seat. Nothing wrong with sitting in the back seat, but it's not the main thoughts of people when it comes to metals. Could that change? I don't think so. I just think right now, as you noted, as your guest had said, platinum's making up for lost time. I think that comes to do regarding the trade war and how India has reacted to the United States and willing to work in the United States. I think India is being opportunist in the sense that they see themselves as somebody that could replace China for some of the things that China had offered on the World Trade Center. And the whole theory and reason behind BRICS is to move away from the dollar and the U.S. So if you're about openly saying, well, I want to embrace the United States more than I have been, then I can understand that transpiring. I don't think it's a blow to the BRICS, and I don't know how long that would last, because I think one of the things that is occurring, I fully expect Trump at when this is all said and done, I won, this is what I wanted, but the world did not beat a path to his door as he was touting from the day he was elected to the so-called Liberation Day. And I think the world has slow-walked themselves dealing with him on the trade front. And while there will be an announced China agreement, China will be much more beneficial to that agreement than everybody was trying to say from the Trump administration back in April. And therefore, I think the reasons on how the BRIC impacted the metals market, particularly gold, will continue. In fact, we know now there's a couple big meetings coming up regarding the BRICS, and there's already scuttlebutt of how they're working gold and the uses of gold into how they plan on trading with one another. And I think unlike 2 years ago when everybody, for whatever reasons, was saying, oh, they're going to announce a new gold converted coin and all that kind of stuff, I don't think that was ever on the table. But I do think by the end of this meeting that are coming up, we're going to have a fairly good idea what their plan is.
The United States spent $1.1 trillion on interest payments in 2024, nearly double what it was paying just 5 years ago, according to data from the Federal Reserve Bank of St. Louis. For the first time, interest expenses have surpassed defense spending, underscoring the increasing financial burden of servicing the national debt. Data from the Stockholm International Peace Research Institute confirms that the cost of interest now exceeds military expenditures. This burden could rise further under the Republican tax and spending bill currently under consideration in the Senate. A June 5 analysis by the Congressional Budget Office projects that the version of the bill passed by the House would add $2.4 trillion to the federal deficit over the next decade. That deficit, defined as the annual gap between government spending and revenue, continues to grow amid tax cuts and elevated expenditures. Looking ahead, the Committee for a Responsible Federal Budget warns that by 2035, interest payments could reach $1.8 trillion annually. The compounding nature of this debt poses serious long-term risks to the U.S. economy. PeterGrandich argues that this unsustainable rise in national debt and its associated interest costs are fundamentally bullish for gold. He notes that, in addition to unprecedented central bank purchases, there is a broader loss of confidence in major global debt markets, including Japan's, which is driving more capital toward gold as a store of value. With financial markets growing increasingly wary of sovereign debt stability, the appeal of gold continues to rise, reinforcing its role as a hedge against fiscal mismanagement and monetary uncertainty. Let's get back to the interview.
Well, I think what you just said at the end, if you just think about what it was like in the early days, you thought him and Musk were going to marry each other, and everywhere they were going, there where they were together. And, Musk was pointing that they're going to save $1 trillion here and $1 trillion. Trump beat his chest all with the deficit's gone. We found so many things, and we may even be able to pay off the government debt by the time we're done. And what's the end result as we speak? It's clearly that their relationship has been severed. None of those type of actual results occurred. A tripling of a few $1 billion of Doge cuts have come out of Congress, trying to get passed. And that is the big concern, bigger than ever, that the United States continues to amount unsustainable debt levels to the point of where interest payments could be questionable. And again, that's beneficial to gold. It's probably the second of 3 or 4 reasons why gold has gone from 1,300 to where it is now. The first was central banks buying in relations to BRICS and a change in the world. And then a second, alternative to U.S. debt. And now alternative to other debt. There's not a lot of people that want to put a lot of money in Japan right now. And they have an issue in their bond market. So gold is returning to what a lot of people like to make fun of, that got involved with crypto, was a relic, it's useless and all. But what it worked for a couple thousand years is doing it again. And that's the biggest selling point, that gold has a track record second to none. Now, there's people talking about crypto and look what it's done for 10 years or 20. And hey, that's great. Don't get me wrong. It's great I doubt anybody had it at 100, still has it now, but it's great to say that there was that performance, but it hasn't even gone through a season yet, let it get a year. And, gold has a couple thousand years of history and track record and all. And I feel much, much safer with a gold than somebody telling me because something sits on a computer somewhere as I'm a rich man. I call me old fashioned, and they call me a lot worse than that, Elijah, from the crypto camp. But gold is doing what we always felt it should do. And now, of course, it's doing it very well. The employment numbers are false. I wrote a big piece about it over the past weekend, and I did an actual audio, very rare for me, because I wanted to make sure I said exactly what I felt. And it's just a farce of how they've come about it. And for a while we thought, well, it was just the Biden administration because they were hiding how really poor the economy was. And now for 4 straight months with our President Trump, we still had 4 employment numbers that end up being reversed the next month later and, of course, lowered. And we just saw that dramatically here. There's also been a great argument that I and some others had that the employment number is not as useful as the household number, because what happens is if I have to work 3 jobs now to keep my family going, and I work at company A, company B, and company C, in the employment number, when they go and talk to the employer, well, there's 3 people working. That's 3 people working. But it's 1 person doing 3 jobs if you go to the household survey. And I think that's a better survey. And that actually saw a loss of almost 660,000 jobs last month. So I think, I don't trust the employment numbers. I think it's a lot worse than it really is. And then that rolls into, it's not a direct result to own gold, but then it rolls into, well, then that means it'd be tougher funding the deficit. If there's a problem funding with deficit, maybe you want to own gold and not U.S. Treasuries. That's how it plays into it. But I think that number, you'll be talking to somebody next month how they turn back this number by 50 or 60 or 70,000. And you know what? I think it's something like 16 of the last 18 employment numbers have been revised and revised down. Man, you wouldn't hire somebody to count your money if they counted, and miscounting that many times and be off by that much to the downside, not to the upside. First of all, anybody who thinks that inflation's been averaging only 0.2 to 0.3% a month for the last 5 or 10 years, I have a bridge to sell you cheap. I mean, anybody, you're living, whether you're paying whatever insurance you're paying, feed, food, clothing, medical, it's going up a lot more than that. So I think, to be realistic, we kind of know that the inflation numbers are fudged by governments. But look what happens by the fudging. So I just talked about an employment number, which I believe and others believe was manipulated. Well, when they put out that news report at 8:30, not even 8:31, 8:30 and 15 seconds. There are computer algorithm programs that see the headline employment beats. Well, the program is prayed as soon as you see that type of news, you buy S&P futures. So everybody says, why? I saw the S&P futures. Peter, in a minute, they went up like 300-400 points. No human is going to chase a market that fast, that much for whatever may be transpiring. But what does it do? It sets the tone for the day. The market went up. Now there's other programs that are program-based. If the market goes up so much, you buy, and it feeds on itself. And that's how they use manipulation. And my biggest concern about Trump, and I don't fall in either camp. I'm not a Magna. I don't have any Magna hats. My wife does. I don't. But I don't dislike the man. I don't think he's evil or anything of that nature. And there's some things he does that I like. But what he's done is he bet the farm that the stock market, which he'll always talk about, is, it's going to go through the roof. It's the best day. It signals how good he's doing or how well he thinks he's going to be. Even now, this money that they're going to propose to give to newborns and things of that nature. And all. I'll tell you this much. I tell this to everybody. Don't watch the stock market. Watch the bond market. The bond market is so much more important and impactful to our lives than what the stock market does. Very rare that the stock market does something unusual up or down and the bond market reacts to it. It's not rare for the stock market to react to something that the bond market does up and down. And a country that's become so indebted and dependent on financing just to keep the lights on, so to speak, I'm more interested in when I wake up in the morning, what did the bonds do and where maybe the dollar be than before, what's the Dow Jones pre-opening figure?
As financial pressures intensify under the weight of mounting debt and interest obligations, gold and silver are stepping into the spotlight as more than just traditional hedges. They're becoming strategic assets in a world rethinking monetary stability. While gold benefits from institutional accumulation and sovereign diversification, silver's affordability has sparked a surge in retail demand, signaling broader market confidence. With inflation softening and fiscal imbalances widening, both metals appear poised for continued strength, supported by a convergence of economic caution and renewed investor confidence in tangible assets. Could the rising cost of servicing national debt be the catalyst that redefines precious metals as essential assets in future-proofing global portfolios? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.